Soft commodity prices weakened noticeably during October, with the exception of grains. That's in response to expectations of ample global supply and flat demand, with Uganda's coffee exports having fallen for the 8th consecutive month. Let's delve into the outlook for soft commodities now. Edward George, Head of Soft Commodities Research at EcoBank London, joining us now. Thank you so much, Edward, for your time as always. Let's first take a look at the outlook for wheat and grain prices. Maize prices, you've got wheat, which was up 2.3% on the month for October. It's up 31% year to date. Maize prices up 18.7%. What is the outlook now for prices from here on out?
Well, certainly prices for grains have been incredibly bullish of recent, and a lot of the reason for this is not just rising consumption levels across the world, but also a lot of bad news from wheat producing or grain producing regions. We had the devastating impact of the drought in the US and that region. There's been very poor wheat output in Europe. The UK is about to have its largest wheat imports ever, and there's problems in Russia and the Black Sea. So ultimately it's been one very long bad story, and there's not too much sign that we've turned the corner yet. And provided we still see the emerging markets consuming more and more grain, I think we're going to see strong prices going forward.
Well, of course, not good news when you're looking at sub-Saharan Africa and the impact that will have on inflation. But let's turn our attention to the cocoa market, because changes to the tax regime there in Cote d'Ivoire upsetting processors to the extent that they've in fact cut off their capex plans right now, and they're suspending all expansion plans. Give us some more detail on that.
Well, the problem is that there's always been, for the last 12 years in Cote d'Ivoire, a kind of subsidy for companies that process locally. And that means when they exported their products, it was on a sliding scale, reducing in tax. Whereas if you exported raw beans, it was 16.7% tax. Now there's changed the law. Now it's the same export tax for all of products. But the big issue is that they are now charging the tax on the weight of beans originally used to make the processed product. And as it takes about 100 kilograms of beans to make 80 kilograms of product, you're looking at it being 25% more expensive tax-wise to export processed products than raw beans. And so the processors are very angry. They have very small margins in their operations, and that's why they've said that they're going to suspend processing or suspend expansion plans. But I do understand that negotiations are underway between the government and them to come to some sort of deal.
Overall, though, just looking at that cocoa price, it was down 5.1% in October, and it's still in a positive territory for the year, almost 13% gain year to date. But you're looking at a strong start to the West African cocoa producing season. How's that going to impact prices going forward?
Well, unfortunately, the news coming out of West Africa at the moment is quite bad. Cote d'Ivoire purchases appear to be down about 30% and Ghana's by 38% compared to the same point in the last season. Now, the last season did start with a surge in production at the beginning, but it's quite a worrying development because, for example, Cocoa Bond in Ghana is only forecasting 800,000 ton crop this year, considerably less than last year. So looking forward for cocoa prices, I think there is an increasing danger of a deficit arising globally over the next year, and so that should offer some support for prices.
Let's move on to coffee, because in fact the worst performer in the commodities basket, soft commodities basket for the month of October, Arabica was down almost 11%, and then you got Robusta down just over 9%. What are your thoughts on the Ethiopian government selling off its coffee plantations? I mean, how significant is that in the broader scheme of things, I suppose in sub-Saharan Africa particularly?
Well, it's certainly significant for the coffee sector. Ethiopia is the largest producer of coffee in Africa, but ultimately, because so much is consumed in the country, the largest exporter is actually Uganda, which is the major Robusta exporter. So the fact that the Ethiopian government wants to privatize some of its coffee plantations as part of broader measures in the economy, I think this shows that the government really is opening up to the idea of foreign investment, and that can only be good in terms of coffee production. But certainly looking at prices going forward, I think for Arabica, the outlook is very bleak. We see massive global stocks, we see rising production as well. Whereas for Robusta, stocks are still going down, demand is still strong. A lot of processors have actually switched to Robusta and changed the blend of their grades. So going forward, I think Robusta, we're still going to see strength.
Just after Arabica, in terms of the worst performer this year, you've got sugar, which is down just over 20%, and another weak month in October. But interesting that Mali is looking to become self-sufficient in sugar. What are your thoughts on them opening up this new sugar mill in the country?
Well, I think the Sukala sugar project is a very positive advance. Mali for years has been importing over 100,000 tons from Senegal and Cote d'Ivoire, and there's real potential in the country because of the land and the water resources available. Unfortunately, a previous project by Ilovu Sugar of South Africa, the Makala, had to be abandoned because of problems with financing and political difficulties. So the fact the Sukala plant has opened and will be producing 100,000 tons a year is very significant. It should mean that within a few years, Mali could look at self-sufficiency, and if they manage to resurrect the Makala project, we could see Mali become an exporter to the sub-region.